Hello everyone, welcome to my YouTube channel ForexPnL. Today is the 12th of August 2022. It's Friday 8:55 p.m. and it's time for me to do my weekend Forex forecast for the upcoming week. As usual guys, we're going to be taking a look at DXY, the 8 majors, and then actually for this particular week we do have a lot of cross pairs that are giving me some structural levels to keep an eye on, okay? And obviously we're going to close things out by taking a look at gold and analyzing gold, okay, for the upcoming week. As usual guys, I'm going to be taking a look at the economic calendar first. So let's go ahead and see what we have on the agenda in Forex Factory, okay, for next week. Now, as you can see for next week, starting off on Sunday, obviously there's no news here on the agenda. And again, I have filtered for bank holidays and the high impact news, okay, because those are the ones that I track personally, all right? Now, as you can see here on Monday, we do have, bank holidays in Italy and in France, okay? And, also in the evening, okay, 9:30 p.m. Eastern time, we do have the monetary policy meetings from the Australian axis, okay? Keep an eye on that one for Australia. And then on Tuesday, we do have, actually the news for this week is now heavy on Tuesday and Wednesday, because as you can see here on Thursday and Friday, we don't have any high impact news on the agenda. But then for Tuesday and Wednesday, we do have the CPI data, okay, coming out from the Canadian axis, okay? Do expect this to move the markets because, based on what's going on around the world at the moment, inflation data is very, very important, okay? And the market has been reacting to the CPI data that is coming out from the, some parts of the world. For example, for this particular week, the major mover of the markets for the US dollar crosses was the CPI data, okay? So keep an eye on this particular news item, okay? Because I expect it to move the markets as well. Now, on same Tuesday, okay, 9:30 p.m. from the Australian axis, we do have the wage price index, okay, for the quarter, scheduled to hit the wires. And then again at 10 o'clock p.m. Eastern time, okay, this is a heavy time for New Zealand, okay. We do have interest rate decision, on obviously the rate statements and the press conference all coming out at 10 o'clock p.m. Eastern time. And as you can see here, we do expect an increase in interest rates by 50 basis points, okay. So this is obviously going to probably have some impacts on the New Zealand dollar crosses and even maybe the Australian dollar crosses as well, okay. So do keep an eye on this particular news item. Personally, I am not going to be in the markets around this time. Usually I'm probably going to be sleeping, but in case you're going to be trading or have any New Zealand dollar related pairs open, you want to keep an eye on this news item. All right, now on Wednesday we do have CPI data coming from the British axis, okay. So this is obviously going to be another market mover in my opinion, okay. This inflation data coming from the British axis. And then on at 8:30 p.m. same day, we do have retail sales data coming out from the United States axis, okay. And later in the day, we have FOMC meeting minutes and the employment and unemployment data coming from the Australian axis, okay. So we do have some fundamentals to keep an eye on in the upcoming week. In my own opinion, we have some heavy hitters here: interest rates, CPI data, retail sales, FOMC meeting minutes, employment data. These are all items that I do expect to move the markets in the upcoming week. So personally I'm going to be expecting a volatile week because of all these fundamental releases that we have on the agenda, okay. All right, so let's see how this is going to impact the markets, and with this in mind, let's now go back into the charts and see what we have in stock from a technical perspective. Now obviously, as usual, we're going to be kicking things off with DXY. As you can see here, I'm looking at the weekly time frame, and what do we have for this particular week? Very, very interesting developments, okay. This week actually started out bearish, okay. If you guys remember, my expectation was for price to give us a bullish move, but only if we do break above pretty much last week's high. And as you can see here, the markets didn't take off that level, and from there the bears came into the markets and we got a nice push to the downside, even though towards the end of the week the bulls came into these markets and flexed their muscles. And as you can see here, this week is now forming a pin bar, okay. Closed the pin bar after price had dipped into this weekly demand zone area, okay. That was formed as a result of this break of structure right here, okay. And right around the same area, we do have a trend line on the weekly charts. You can see the bounce, and this is the third bounce right now. So this is obviously a bullish confluence right around this area, and from here the bulls have come back to kind of protect this level at this particular point in time. So bearish week, but again some bulls came in at the bullish confluence area. Okay, so let's see how that affects the other time frames. Now, from the daily time frame, what do we have here? Well, this market actually is trading in some form of a falling channel, as you can see here on the daily. Okay, the market's finding some hesitation around this particular area on the chart. You can see the weak rejections that we got, and then finally we got a break to the downside that took off this previous swing low that we have in this area. So well, at this particular point, the market is forming pretty much lower highs and lower lows, which well is indicative of a downtrend. But since we are in an overall uptrend, okay, we can consider this to be a retracement at this particular point, such that well, maybe the expectation is probably the market's probably going to give us a break to the upside, and only then will we start having some confidence that the bulls are coming into this market for potential continuations to the upside. Okay, so not much to be said from the daily time frame, other than the fact that the market is in a retracement right now. We are in a form of falling channel, which might be more evident in the 4 hours time frame. Okay, so let's take a look and see what we have on the 4 hours time frame. So in the 4 hours time frame, you notice that well, this was the area that I was that I mapped out in last week's Forex forecast, and I told you guys the market was somewhere right around here, and I said I would like to see this level get broken. But you can see after a little sideways movement, the markets gave us a very nice push to the downside that took off this level of structure and this level of structure in the process, creating this supply zone that we have right around 106.30 area, okay, or 106.25 area. So right now, this is obviously a key level on these charts. I would love to see if the bulls are going to take over in this market. I would love to see a momentum push, obviously above this particular level, this level of supply that we have here. Whenever that happens, then chances are the bulls are now coming into this market, and upon pullbacks to demand zones that led to the break of this level of supply and even possibly this level of structure, I'll be waiting for price to pull back to those demand zones for further continuations to the upside. Okay, and that's pretty much the game plan that I have for this particular pair. In the event that, let's say, the bears begin to come into these markets, okay, then this is obviously demand zone area. We do have significant buying origins in this area as well. So chances are, if the bears are going to come into this market, let's say this supply zone holds and the market continues again to the downside, breaking below this trend line, then keep an eye on the base of this falling channel area right around here, and which pretty much might coincide with these buying origins that we have in this demand zone area as well. Okay, so maybe something of this nature can now come out and play out this way. Okay, but that's going to be more or less a complex correction. Right now, let's see if the the bears are going to what I expect personally would be maybe for price to give us maybe another push to the downside. So just grab liquidity, okay, below this trend line, okay, trend line liquidity, grab liquidity, if possible, even below these lows. And then from here, give us a nice attack to the upside, okay, that will now take off any supply that was formed around here and also this supply zone that I had mapped out here. When that happens, any pullbacks, I'll be looking for price to fill up demand zones for further continuations to the upside, okay. That's going to be my preferred course of action. But at the end of the day, you guys know the market will do whatever it wants to do, okay. So just take this as my own opinion. All right, that's it for Dixie. Next up is going to be US dollar Swiss francs. Now, for US dollar Swiss francs, what do we have on the weekly charts? Finally, guys, if you remember, I have mapped out this demand zone on the weekly charts for the longest, okay, maybe a few months now, and finally the market hesitated, and now somehow we have now retraced back into that particular weekly demand zone. You can see that for this particular week the market has now tapped this particular demand zone area, and well, who knows, will this be the beginning of the bullish move? Okay, maybe if the markets open for this particular week that we're about to get in, maybe another quick flush to the downside deeper into this demand zone, from where maybe, you never know, the bulls might now come into these markets to start pushing things again to the upside. Okay, let's see. Okay, but for now, this is obviously a demand zone that was formed as a result of the break of this level of structure that we have in this area. Okay, so right now price has retested that demand zone area. Do we get maybe another quick push to the downside deeper into the demand zone before the bulls come into the market? Well, only time is going to tell. But for right now, all we can say is that the bears came in momentum for this particular week. You can see we have a full body bear candle, and from here, who knows? Let's see how market is going to develop next week. Now, if we go into the daily time frame, Not much. You can see that in that particular push to the downside that took off this previous swing low, well, the market has now formed obviously in a supply zone here on the daily, which the bulls will have to battle with if this market is going to go to the upside. Okay, so obviously that supply zone was formed as a result of the break of this level of structure that we have here. So chances are maybe the market opens, we get a quick push to the downside, or even possibly a push to the upside into this particular daily supply zone area. Very, very possible. And then maybe some bears might come into these markets to flex their muscle, from where maybe we might now get the bulls from the longer time frame that might come into these markets to now start pushing these markets again to the upside. But personally, I would love to see the supply zone give way to the upside, and when that happens, I'll be waiting for price to give me a pullback into demand zones that that led to the break of that level of structure, or that took off this supply zone from there for further continuations to the upside towards the previous swing high area. Okay, that's going to be my preferred course of action. But again, this move probably will not happen in one particular week, so just keep that in mind as you analyze your trades, okay, or that as you plan out your trades for next week. Okay, but I'm just showing you the kind of preferred course of action that I would like to see in this particular currency pair. Now, in the event that, let's say, the market opens next week and the bears just continue to do their thing, such that we begin to take off this weekly supply zone area, then in that case, obviously, we're just going to reanalyze the markets, wait for price to pull back to supply zones that led to the break of this weekly demand zone area, from where we'll be looking for short opportunities for further continuations to the downside. Okay, that's pretty much what I can see in US dollar, Swiss francs. Okay, now if we go into the 4 hours time frame, not much. Well, we do have obviously a supply zone that is forming in this particular area, right around that let's say 0.9525 level. Obviously, the supply zone that led to the break of this level of structure. So very easily, price can give us a push into that particular supply zone area, and from here the bears can come into these markets again, okay, to continue to push these markets to the downside. Okay, so keep an eye on that particular level and watch and see how the market behaves right around that area. Now, that's pretty much it for US dollar Swiss francs. Next up is going to be Euro US dollar. Now, Euro US dollar, well, this particular pair for last week, again, I was expecting the markets to continue to the downside, but again, if you remember, I had mapped out a range in the 4 hours time frame, okay, something of this nature, and I told you guys that well, personally, I would love to see the bears take off the low of this range before I start searching for short opportunities. And you can see how the bulls came into this market, okay, and just continue to push these markets to the upside, okay, towards this daily supply zone area, okay, and from there, well, obviously that setup, by the time we took off these highs, that setup was violated, and you can see that the markets just tapped the daily supply zone area, and from there now we are reacting again to the downside. Now, personally, what do I see in this particular currency pair? Well, here in the 4 hours time frame, obviously we do have the weekly supply zone up here, we have the daily supply zone up here, and you can see that we do have an overlap of the weekly and daily supply zone right around that 1.0500 area, let's say 1.0475 level. So personally, I personally think the markets might still give us maybe one more quick push to the upside. Okay, we did get a very clear break of the top of this range, okay, forming this particular demand zone in the process, okay, this demand zone that we have in this area right here. Okay, so well, it's very, very possible that the markets might give us a dip to the downside. Very, very possible we might get a quick dip to the downside into this particular demand zone area, or even maybe from right around where the market is right now, price can just give us a quick push to the upside. Okay, because you can see in this area we do have this previous level of structure right here, so the markets can easily give us a continuation to the upside from here. Okay, so well, but my key level in this particular market is for price to give me maybe another quick push to the upside, just to give us a dip into this particular daily supply zone area. Okay, anywhere from this particular neighborhood here, I think the bears might begin to flex their muscle again for further continuations to the downside. Okay, that's what I would love to see in Euro US dollar. So key levels, probably let's say around 1.0450, 1.0500 institutional price levels. Okay, so let's see how this market is going to develop as we go into next week. Okay, so if we I'm doing this in reverse, but you see, if we take a look at the weekly time frame, you see that we did get obviously a nice push to the upside, but again the bears came in from right around that daily supply zone area. Okay, so and you can see that that daily supply zone area just corresponds with the previous swing low that we have in this particular area, which in my opinion is very, very clear in the daily time frame. As you can see here, this is a previous level of structure. Okay, support gets broken, forms this daily supply zone area, price dips into that daily supply zone area, and the bears are now coming back into these markets. Okay, so let's see if we are going to get maybe another attack to the upside. All right, and let's say a quick attack to the upside into this daily supply zone, from where maybe the bears will flex them also for further continuations to the downside. Okay, this is going to be my own preferred course of action. Okay, all right, so that's it for Euro US dollar. Now next up is going to be Australian dollar US dollar. Now for this particular currency pair, price is trading very close to a weekly supply zone area. You can see this weekly supply zone that was formed as a result of the break of this level of structure. Price is very close. However, if you pay attention to this week's candle, full body bullish candle. Okay, this is not the kind of candle that you want to go against. Okay, so I would say be very careful with this particular currency pair. Even though we are running into a supply zone area, I would be very, very cautious. There are better trading opportunities, in my own opinion, if you are looking to go short in this particular currency pair, in the US dollar related currency pairs. Okay, so this is one, and it's not my best setup, to be completely honest with you, at least if you are looking to go short. However, if you're looking for the to go long, some kind of inverted head and shoulder in here, okay, with this being the neckline, okay, this level of structure that was broken to the upside, thus creating this particular demand zone in the daily time frame. So well, let's see, that's obviously a level where the bulls came into these markets right around 0.7000 institutional price level. Okay, so who knows, maybe the markets might open next week and we might get, let's say, a quick dip into this 4 hours demand zone area before the markets maybe give us another nice push to the upside, okay, into this weekly supply zone, from where maybe the bears might come into these markets and, you know, start doing their thing to the downside. But obviously keep an eye on this particular daily supply zone area, because the markets can dip into this daily supply zone area. From here you might now get maybe another push to the upside towards this weekly supply zone area as well, before we maybe the markets give us that push to the downside. Okay, so just keep an eye on this particular currency pair for, you know, a complex correction. And well, you know, I would say, you know, it's not the best looking, but this is kind of the price action that I would like to see in this particular currency pair going into next week. Obviously, I don't expect all of this to happen next week, so you know, just be very careful. And well, this is just my own two cents. All right, so that's it for Australian dollar US dollar. Next up is going to be US dollar Canadian dollar. Now for US dollar Canadian dollar, well, if you go into the weekly time frame, what do we have here? Well, in this particular case, obviously we are trading inside a, you know, let's say a rising channel, okay, but the markets obviously is not really moving in any particular direction. It's almost like we are ranging. You can see it's almost like a sideways movement, okay, even though we are forming higher highs and higher lows, which is indicative of an uptrend. Okay, we do have a weekly demand zone in this area. Price pretty much just tapped the top of that demand zone area, and you can see that some bulls are coming into these markets already. Personally, what I would love to see is maybe another push to the downside upon markets open deeper into this particular weekly demand zone area, from where I would expect the bulls to now come into these markets, and, you know, for this demand zone to hold for further continuations to the upside. Okay, at least towards, let's say, 1.3000 institutional price level. Okay, that's going to be my preferred course of action as we go into next week. Okay, again, will that move happen all in 1 week? Who knows, only time will tell. Now, if we take a look at the daily time frame here, in the daily time frame, not much, honestly. It's just, you know, sideways movement, in my own opinion. Okay, so let's just see what's going to play out here. Maybe the market gives us another dip to the downside into this particular, let's say 126.50 areas, from where maybe, you know, the bulls will now come in. We probably will see a change of character in the smaller time frame, and then from there we'll start searching for price, waiting for price to fill up demand zones that led to the break of that level of structure for further continuations to the upside towards 1.3000. Okay, that's going to be my preferred course of action in US dollar Canadian dollar. Okay, like I said, it's not the highest quality trade, so be very careful. If you have better setups, just trade those ones. It's that simple. Okay, all right, that's it for US dollar Canadian dollar. Now next up is going to be New Zealand dollar US dollar. Now for New Zealand dollar US dollar, this pair is already at the weekly supply zone area. Okay, you can see price has, you know, pushed into that weekly supply zone area. However, watch this bullish candle here, quite similar to the setup we have in Australian dollar US dollar currency pair. Okay, very massive bullish push into this particular supply zone area. So chances are the markets might open next week, might have maybe a little push to the downside to fill up demand zones in the smaller time frames, from where the bulls might come back again into this market to at least push these markets deeper into the weekly supply zone area that we have here, probably paying attention towards that let's say 0.6530 level, which corresponds to this particular previous level of structure that was broken, from where maybe the bears might now come into these markets to start flexing their muscle, okay, to respect or to protect this weekly supply zone area that we have in this area. So let's see if we are going to maybe get that push to the upside to form the high of the week, from where the bears might come into these markets, to start pushing these markets again to the downside. Okay, that's what I can see right now from the weekly time frame. Now, if we go into the daily time frame, quite similar again, some form of inverted head and shoulder. Okay, obviously some form of demand zone in this area on the daily time frame, and right now price is dipping into that particular weekly supply zone area. So let's see how it goes. Okay, if we zoom into this 4 hours time frame, the picture gets a little clearer. We do have obviously this demand zone area here. So early next week, what I would love to see is for price to give me a dip to the downside into this particular demand zone area that we have right around, let's say 0.6400 institutional price level. Anywhere from right around here, guys, I would like to see the bulls come into this market and give us another quick push to the upside deeper into this particular weekly supply zone area, from where I will expect the bears to come into this market, and start pushing things again to the downside. Okay, so let's see how this is going to play out. Now, that's it for New Zealand dollar, US dollar. And again, as usual, guys, if this market does not do what I have just said, it's very, very simple. All you have to do is know your levels, reanalyze the charts, follow demand and supply zones that form on the charts. It's that simple. Okay, nobody has a crystal ball. Okay, all I'm doing is just to analyze the markets based on demand and supply zones that have already formed on our charts. Okay, so if the market does not behave in this way, and and something else forms, just follow the markets. It's that simple. Okay, all right, now that's it for New Zealand dollar, US dollar. Next up is going to be British pounds and US dollar. Now, if we go into the weekly charts for British pounds, US dollar, price continues to respect this supply zone that we have on the weekly charts. You can see that for 3 weeks now, we have significant weak rejections to the upside. Okay, you can see how the bulls come into the market, and the bears protect that supply zone again for the second week, and then now for the third week, and you can see even a bigger weak rejection. So everything is still pointing to the downside from a longer time frame perspective. However, personally, I still think maybe upon the opening of next week, we might get a quick push to the upside before finally this market might now flush heavily to the downside. Okay, that's what I would love to see in British pounds US dollar, or that's what I can see right now in British pounds US dollar based on the candlestick pattern and the weak rejections that we are getting off of this weekly supply zone area. Okay, now if we take a look at the daily time frame, what do we have here? In the daily time frame, not much. The market just showing us some form of rejection. You can see that 3 days ago we did get some significant bullish push to the upside, but the markets did not quite take off this previous swing high that we have in this area before the bears started coming into these markets again. All right, so something has, the market is slowly but surely building liquidity around this area. You can see we have relatively equal highs at this point right now. So what I think might happen next week is maybe the market opens, we might get a little push to the downside, maybe to retest this trend line from below and from above, and then maybe from here the bulls might come into these markets, okay, to push these markets to the upside, such that we're going to grab liquidity above these particular relatively equal highs, and then from anywhere right around there the markets will now start to flush again to the downside. This is what I would love to see from a price action perspective, okay, for further continuations to the downside. All right, that's kind of what I can see right now in British pounds US dollar. Now again, if you pay attention here in the 4 hours time frame, we do have some demand zone in here that led to the break of all this level of structure that we have in here. So personally, it's very, very possible that the markets might give us another push to the downside, okay, deeper into this particular demand zone area that we have, let's say 1.2080 levels, and then from here retesting the trend line as well, we might get some bulls coming to this market to give us a quick sweep to the upside to grab liquidity above these equal highs, and then anywhere from right around there, maybe 1.2300 or something of that nature, the bears might come into these markets and start pushing the markets to the downside. Okay, but until price begins to take off this this rising channel that we have, this particular trend line, then until price does that, the bears are not yet in control. So keep that in mind as you do your analysis for next week. Okay, so that's pretty much what I can see right now in British pounds and US dollar as we go into next week. Now, next up is going to be US dollar Japanese yen. Now, US dollar Japanese yen, if we take a look at the weekly time frame, well, you can see that again, for a second week, it seems like price is finding some rejection off of this previous swing high that we have in this area. You see that we now have, anytime price pushes down into that particular area, we get some bulls, that come in to try to protect that particular area. You can see the weak rejections we are getting at this point. But that being said, the demand zone that led to the break of that level of structure is sitting down here right around 12800 institutional price level. Okay, so in my own opinion, I believe that the markets might maybe give us a push to the upside, and then maybe finally find a way to give us, let's say, a quick push to the downside towards this daily demand zone area, that this weekly demand zone area that we have sitting right around 12800 before we get this significant bullish move that we are anticipating in this particular currency pair. Obviously, this is the weekly time frame, and I'm just telling you what I would prefer to see in this particular currency pair, in the long run. Okay, maybe a little push to the upside, retracement to the downside into this weekly demand zone area, from where I will expect the bulls to come in for maybe another nice swing to the upside. Okay, all right, so that's pretty much it for US dollar Japanese yen on the weekly time frame. Now, if we take a look at the daily time frame, you'll notice that I have mapped out here a daily supply zone of interest. Well, my expectation this week was actually that price would give us a dip into that particular daily supply zone area, but you can see that we did not make it to that particular level. However, that is still a valid daily supply zone area that was formed as a result of the break of all these levels of structure, all these demand zone areas that we have here to the left. Okay, so there are definitely orders probably sitting down in this particular area, and the markets might easily give us a push to the upside into this particular daily supply zone area, from where maybe the bears might come back into these markets to now flex their muscle towards this particular weekly demand zone area that we have identified on the weekly time frame. Okay, from where I will expect the bulls to come into this market. Okay, so that's pretty much what I can see right here from the daily time frame of US dollar Japanese yen. But if we take a look at the 4 hours time frame, you begin to see the picture a little clearer, because we do have some supply zone in this area right around that 13500 institutional price level. You can see that from there we had a significant sellout, okay, to the downside, okay, that took off this demand zone area. Okay, so in my own opinion, I would not be surprised if the bulls come into this market, push the markets to the upside towards that 13500, from where maybe a decision has to be made whether we are now probably going to take off from this area towards the downside, or if the market is just going to react from that level to retrace into a demand zone, and from there maybe a bigger push to the upside towards that daily supply zone area that I identified on the daily charts. Okay, but all in all, what I would prefer to see in this pair is maybe a little push to the upside, from where the bears will come into this market to start pushing these markets heavily to the downside towards 12800 institutional price level, which is the daily the weekly demand zone area. Okay, so that's pretty much what I can see here in US dollar Japanese yen. Obviously, I'm going to be updating you guys on the the midweek forex forecast that I post on my Telegram channel. For this particular week, I did not post that particular forecast. Maybe it's a hangover from my vacation, who knows, but I just wanted to let you guys know I'm sorry I did not post it, and I'm going to try to post it going forward. Okay, all right, next up is going to be British pounds and Japanese yen. All right, so for GJ, what do we have here on the weekly chart? Well, the hesitation continues. All right, you can see that GJ is actually trading inside a very nice rising channel on the weekly chart. Okay, you can see this rising channel that GJ is currently trading in. So I think on the weekly time frame, based on what I can see here, price is probably going to find a way to give us that push to the downside, maybe towards the trend line of this rising channel, from where the bulls will probably come back into these markets to give us a very nice push to the upside, probably towards 17500 institutional price level. Okay, that's what I can see in GJ in the long run. Okay, off of the weekly charts. From the candle formation that we had this week, not much. In my own opinion, price is almost in the middle of nowhere, and the markets will probably open next week to give us a nice push either to the upside towards this particular trend line, from where maybe the bears may come back into this market towards this particular rising channel, the trend line of the rising channel that now coincides with the demand zone area on the daily time frame. Okay, so this is probably what I would love to see in this particular currency pair from the from the price action that I can see right now. Okay, now if we go into the daily time frame, what do we have here? Now in the daily time frame, if you pay attention here, we do have obviously a daily supply zone area here. Okay, so it's very possible the markets open next week and we get, let's say, a quick push to the upside to retest the trend line of this falling channel that we do have on the daily chart. Okay, so even though on the weekly we have a rising channel, you notice that right now the market is retracing on the daily charts inside a falling channel. Okay, and well, very possibly I'm going to be keeping an eye at 16500 institutional price level, which kind of coincides with the top of this particular falling channel from where and also this supply zone area that we have in this area. Okay, so from here I will expect the bears to probably come into this market, give us a quick push to the downside towards this particular demand zone area that we have on the daily chart, change of character in the smaller time frame, further continuation to the upside. This is going to be my preferred course of action in British pound, some Japanese yen as we go into next week. So let's see how this is going to pan out. Now keep in mind that the markets can just open, give us a quick push to the downside, okay, towards this particular the base of this falling channel, which probably coincides obviously with this particular daily demand zone area from where the bulls can easily come into this market for further continuation to the upside. Okay, so just keep that in mind. These are pretty much my preferred course of action in this particular currency pair. All right, so that's it for GJ from the daily charts. Now if we go into the 4 hours time frame, do we have anything? Well, as you can see here, price is slowly building liquidity. We do have equal highs in this particular area. You can see how previous swing high, high. Okay, all of this is all liquidity areas. Okay, so again, it's looking actually clearer in my opinion. Markets might give us a quick push to the upside to grab liquidity above these equal highs. Okay, and in that process give us that dip into this supply zone that we have on the daily time frame, from where I will expect now the bears to come into this market and give us that push to the downside. Okay, that is going to be my preferred course of action in British pound, some Japanese yen, based on the price action that I can see on the charts at this moment. All right, now that's it for GJ, and that is it for the majors. Now I do have a few cross pairs that are giving me a structural level to keep an eye on. As usual, I'm not going to be wasting a lot of time in this particular cross pairs. I'm just going to be hitting the setups that I'm seeing. Okay, now first is going to be euro yen. As you can see here in euro yen, quite similar to the GJ currency pair. Not going to waste much of your time here. What I would love to see as we go into next week is for these markets to give me a quick push to the upside into this daily supply zone area, from where I will expect the bears to come into this market to give me a dip to the downside towards this demand zone area and the trend line of this rising channel that we have on the weekly charts for further continuations to the upside. Okay, that's pretty much my game plan. That's my game plan for euro yen as we go into next week. Next up is going to be British pound, some Swiss francs. Hopefully you guys made some money from this, because for the past 2 weeks I've been telling you guys that I'm anticipating a bearish breakout in this particular currency pair below 1.1530, and that happened accordingly, and you can see that the bears are in this market continuing to push these markets to the downside. Okay, in my own opinion, chances are we are going to probably continue to the downside, but it depends on the amount of retracements that we are going to get. You notice that well, because we've now broken this level of structure, we have a daily supply zone area here. So from the daily charts, it's very possible we can get a push to the upside towards this particular daily supply zone, from where I will expect the bears to come back into this markets to continue to push these markets to the downside. Now if we don't get that deep of a pullback, we also have obviously our 4 supply zone in here that led to the break of this level of structure. So well, from here the bulls can easily come into this market, and anywhere from right around here, let's say 1.1500 institutional price level, the bears can easily come into this market and start pushing this again to the downside. All right, so keep an eye on both levels. Okay, that's it for British pound, some Swiss francs. Now next up is going to be New Zealand dollar, Swiss francs. Now in my own opinion, this pair just continues to work strongly to the upside. Pay attention and see how we got a very nice break of this level of structures. And you can see that this demand zone was formed in the process. We've gotten a mini reaction to the upside, but in my own opinion, what I would love to see in this pair is for price to give me that deep into this particular area. Let's say anywhere inside this 4 hours demand zone area, anywhere from right around here, I will expect the bulls to come back into this market for further continuations to the upside. Okay, that's going to be my preferred game plan for New Zealand dollar Swiss francs. Now next up is going to be British pounds and Australian dollar. Now you can see this pair just continues to collapse. Okay, we do have two levels, I believe. So one is the daily level. You notice that on the daily chart here, we do have key level of structure that was taken off in momentum this week to the downside, creating this supply zone on the daily chart. So well, if we do get any deep pullbacks into this particular daily supply zone area, in my opinion, that's a high quality level to start searching for short opportunities for further continuations to the downside. Notice how I already have my alarm sitting at that particular level. Okay, all right, now if you go into the 4 hours time frame, in case the market does not make it deeper towards, let's say, 17300, pay attention here and you will see that we do have this mini supply zone area that led to the break of this particular level of structure right around, let's say, 1.7250 levels. So anywhere from right around there, let's say the market gives us a pullback early next week into, let's say, that area, anywhere from right around here, guys, I will expect the BS to come into this market for further continuations to the downside. Both of them are high quality levels from where I believe the markets can easily turn around for a very nice push to the downside. Okay, all right, so that's it for British pounds Australian dollar. Next up is going to be Euro Australian dollar, quite similar to British pounds Australian dollar. Same setup pretty much. You notice that we do have this particular supply zone area that led to the break of this level of structure to the downside, and you can see that well, in the smaller time frame, the markets gave us a dip in this particular candle. You notice how others were picked up from there, from where the bears came into these markets and continue to push these markets to the downside. So that being said, early next week, I'm keeping an eye on this particular supply zone area, anywhere from right around here. If we get this pullback, guys, high quality level, in my own opinion, to start searching for short opportunities for further continuations to the downside. All right, that's gonna be I already have my alarm sitting there as well, so you know I'm obviously monitoring this particular one. Next up, Euro New Zealand dollar, quite similar. You will notice that well, the story remains the same. I do prefer the setup we have in Euro Australian dollar to this one, to be completely honest with you. But that being said, this level is still valid in my own opinion. So price pushes into this particular zone, maybe 60-50 institutional price level, anywhere from right around there, I'll be looking for an opportunity to go short for further continuations to the downside. But that being said, if both of these setups happen at the same time, let's say Euro New Zealand and Euro Australian dollar, I'm obviously going to be taking the Euro Australian dollar setup. And my reason for that is because if you remember, I think on Tuesday, on Wednesday, we do have interest rate decisions coming up from the New Zealand axis. Okay, so personally, I prefer to stay away from that and take my trade in the Australian dollar currency pair. Okay, so let's just see how that goes. Just keep that at the back of your mind. Now the last but not the least is going to be British pounds and New Zealand. Well, as you can see here, obviously we do have this particular supply zone that led to the break of this level of structure. So easily price can give us a dip to the upside into that particular supply zone area, anywhere from right around here, guys. Any reversals will give us a very nice confirmation for further continuations to the downside. Okay, at least for a possible retest of the previous swing low that forms on this chart. Now the last but not the least is going to be gold. Okay, so let's take a look and see what we have in store for gold. Now, if you guys remember, starting off from the weekly charts, notice how gold is now somewhere inside. We are actually bouncing off of this particular range that we have. You remember we had this range and price retested the bottom of that range, and now it's as if we are getting a bounce to the upside. Okay, but on that journey to the downside, notice how price was trading inside this falling channel that we have here, which is clearer on the daily time frame. Okay, this was that falling channel. I was monitoring that falling channel. First of all, it looked like a fake out. Okay, you notice how we got a quick push to the upside, and then the bears came in and closed this pin bar. So I was waiting for it to see if the bears will come in momentum in this market, so that this will just be a fake out. But notice how this particular day, okay, Friday today, closed a solid bullish candle above that trend line. So this is the first sign of weakness for the bears. Okay, even though we are still within this particular daily supply zone area, closing above this particular trend line is not something I wanted to see. So well, it's in a no man's land right now. The market needs to make a decision, in my own opinion. And right now, before I start thinking of buying this pair, this market needs to take off clearly this daily supply zone area. If that happens and we have a clear momentum break to the upside, then upon pullbacks, I'll be waiting for price to fill up demand zones in the smaller time frames for further continuations to the upside. Okay, that is going to be obviously one of the patterns that I'm going to be looking out for. Now from here, let's just say that this is a market anomaly, and let's say from here the market opens next week. I would love to see a massive push to the downside in gold back into this particular channel, from where, you know, upon any pullbacks to fill up supply zones, I'll be looking for an opportunity to go short for further continuations to the downside, okay, towards this previous swing low as well, maybe let's say 1700 levels. Okay, so right now, like I said, gold is breaking that retracement trend line, okay, actually breaking the top of that falling channel, but at the same time we are still within this particular daily supply zone area. So in my own opinion, if price is inside this area here, I am not interested. It either has to break, okay, and then show me its hand to the upside, or break below to show me that these bears are now in control. All right, so that's pretty much what I can see in my charts right now. I know this is probably a long video, guys. We had a lot of currency pairs to cover. Bear with me, okay? There's no way for me to make it shorter. If I make it shorter, I'm going to cut off from the explanation, and I don't want to do that. Okay, so hopefully you gain some value from this particular video, and if you did, guys, please do not forget to hit on that like button, subscribe to the channel, and you know, click on that notification bell so that you will always get updates whenever I post a video. That's it from my own end, guys. Hopefully you have a very good weekend and a profitable trading week ahead. Cheers and bye bye.